Hey there, fellow finance fans. Let's talk Bitcoin. You know that digital currency everyone's been buzzing about? 1 minute, it's soaring higher than a SpaceX rocket. The next, it's plummeting faster than my hopes of understanding NFTs. It's a wild ride, and lately there's a new player in the game, ETFs. Think of them as the cool kids in school, suddenly wanting to hang out with the mysterious, unpredictable Bitcoin. But are they good influences? Let's find out. Buckle up, buttercups, because we're diving deep into the world of Bitcoin ETFs. So, what exactly are ETFs? Imagine a basket, not a picnic basket, although that would be delightful. Instead, think of a basket that holds a variety of financial assets. This basket is filled with assets like stocks or bonds. These assets are carefully selected to represent a specific market or sector. ETFs, or exchange-traded funds, are like little pieces of that basket. You can buy and sell these pieces on the stock market, just like individual stocks. This makes ETFs a flexible and accessible investment option for many people. Now, imagine a basket specifically filled with Bitcoin. That's a Bitcoin ETF. It allows you to invest in Bitcoin without the hassle of actually buying and storing the digital currency yourself. With a Bitcoin ETF, you get the benefits of Bitcoin investment, such as potential high returns, without needing to worry about digital wallets or security risks. It's a convenient way to gain exposure to the cryptocurrency market, but like a delicious cookie, there's always a chance of crumbs, or in this case, market mayhem. The value of Bitcoin can be highly volatile, and this volatility can affect the value of your Bitcoin ETF. So while it's a convenient investment, it's not without its risks. Always do your research and consider your risk tolerance before diving in. So how do these Bitcoin ETFs affect the already turbulent price of Bitcoin? Well, imagine a popular kid starts wearing a certain brand of sneakers. Suddenly, everyone wants those sneakers. ETFs work similarly. When a Bitcoin ETF launches, it attracts new investors. This surge in demand can push the price of Bitcoin higher. More buyers, less Bitcoin to go around, prices skyrocket. Simple supply and demand, folks. But remember, what goes up can also come crashing down. Section 4, riding the waves, ETFs and market volatility. Here's the thing about Bitcoin, it's volatile, like really volatile. It's the friend who gets super excited 1 minute and then disappears into a dark corner the next. And guess what? ETFs can amplify that volatility. How? Well, when the market gets jittery, ETF investors tend to panic sell. This mass exodus can send Bitcoin prices tumbling faster than a politician's promise during an election year. So yeah, buckle up those seatbelts. Section 5, Futures versus Spot, a Tale of Two ETFs. In this section, we will delve into the fascinating world of Bitcoin ETFs and explore the key differences between futures-based and spot ETFs. Understanding these differences is crucial for any investor looking to navigate the volatile waters of cryptocurrency investments. Now, not all Bitcoin ETFs are created equal. Each type has its own unique characteristics, benefits, and risks that can significantly impact your investment strategy. There are two main flavors, futures-based and spot ETFs. These two types of ETFs offer different approaches to gaining exposure to Bitcoin, and it's important to understand how each one works. Futures-based ETFs, as the name suggests, track Bitcoin futures contracts. These contracts are agreements to buy or sell Bitcoin at a predetermined price at a specific time in the future. It's like betting on the future price of Bitcoin without actually owning it. This can be advantageous for those who want to speculate on Bitcoin's price movements without the need to manage the actual cryptocurrency. Spot ETFs, on the other hand, hold actual Bitcoin. This means that when you invest in a spot ETF, you're essentially buying a share of a fund that owns Bitcoin directly. This means their price is directly linked to the real-time price of Bitcoin. Which one is better? The answer depends on your investment goals and risk tolerance. Well, that's like choosing between a unicorn and a dragon. Both options have their own unique appeal and potential drawbacks. Both are mythical creatures with their own pros and cons. Futures-based ETFs can offer higher leverage and potentially higher returns, but they also come with higher risk and complexity. Spot ETFs provide a more straightforward and direct way to invest in Bitcoin, but they may not offer the same level of speculative opportunity. Ultimately, the choice between futures-based and spot ETFs comes down to your personal investment strategy and how you want to engage with the world of Bitcoin. Section 6. The regulators keeping a close eye on Bitcoin ETFs. The regulators, those lovely folks who love setting rules and regulations. They're like the strict parents of the financial world, always trying to keep things in check, and they've got their eyes on Bitcoin ETFs. Governments worldwide are still figuring out how to regulate this new breed of investment. Some are more welcoming than others. The approval or rejection of a Bitcoin ETF can significantly impact the cryptocurrency market. It's a delicate dance between innovation and regulation, folks. Section 7, the future of Bitcoin ETFs, a world of possibilities. So what's next for Bitcoin ETFs? As the financial world continues to evolve, Bitcoin ETFs have emerged as a hot topic. These financial instruments are designed to track the value of Bitcoin, allowing investors to gain exposure to the cryptocurrency without actually owning it. But what does the future hold for these innovative products? Will they revolutionize the way we invest? Some experts believe that Bitcoin ETFs could democratize access to cryptocurrency investments, making it easier for everyday investors to participate in the market. By offering a regulated and familiar investment vehicle, Bitcoin ETFs could potentially attract a broader audience and bring more legitimacy to the crypto space. Or will they crash and burn, leaving investors with nothing but digital dust? The volatility of Bitcoin is well known, and this risk extends to Bitcoin ETFs. Market fluctuations, regulatory changes, and technological challenges could all impact the performance of these funds. Investors must be prepared for the possibility of significant losses. The truth is, nobody knows for sure. The financial landscape is unpredictable, and the future of Bitcoin ETFs is no exception. While some analysts are optimistic about their potential, others caution that the risks may outweigh the rewards. It's a complex and uncertain environment. The world of cryptocurrency is still evolving, and Bitcoin ETFs are just one piece of the puzzle. As blockchain technology advances and new cryptocurrencies emerge, the market will continue to change. Bitcoin ETFs represent a significant development, but they are not the end of the story. One thing's for sure, it's going to be an exciting ride. What do you think? The journey of Bitcoin ETFs is just beginning, and it promises to be filled with twists and turns. Whether you're an investor, a trader, or simply an observer, there's no denying the intrigue and potential of this financial innovation. Are Bitcoin ETFs the future of finance or a recipe for disaster? Let us know. The debate is ongoing and opinions are divided. Some see Bitcoin ETFs as a groundbreaking step forward, while others view them as a risky gamble. Your perspective matters, and we want to hear from you. And always remember, never invest more than you can afford to lose in the great crypto casino. The world of cryptocurrency is thrilling, but fraught with danger. Caution and careful consideration are essential as you navigate this ever-changing landscape.